Well guys, there it is, ticker symbol CCL, Carnival Cruise Line. This is a $48 stock, and I've plowed about $17,000, $18,000 into the stock in just the past few weeks, and I plan on getting in total more than $100,000 in this particular stock. And so in this video, I want to go into depth about Carnival Cruise Line, why I want to build this into a big position, why I'm so excited about this, and why I look at this stock as a pretty easy money stock for me over the next 5 to 10 years. So I hope you guys really enjoy this. It's going to be an in-depth video. Make sure you smash the thumbs up button, and this is a type of video that doesn't just explain like why I'm bullish on the stock, but it goes into a lot of my thought process on why I get bullish on a stock and those sorts of things. So I hope you guys get a ton of value out of it. And by the way, leave in the comment section what you think about this stock. I would love to hear from you guys, whether you hate this stock, whether you love this stock, or you're kind of indifferent. Let me know. Alright guys, so starting to get into this here. So if you don't know Carnival Cruise Line, it's a cruise company. At the end of the day, they have these massive ships that usually take hundreds of passengers or thousands of passengers to a destination of some kind. And you generally have a mixture of folks on these cruises, okay? You can have like the families, you know, with the little kids and things like that, because a lot of families love to go on cruises. You can have retired folks on cruises. You can have people going on bachelor parties, bachelorette parties. You really get a good mixture of folks on these different cruises. And in terms of Carnival, it's not like they just own like the Carnival brand. They own some of the other biggest brands out there, such as a Costa brand, okay? Holland America, P&O Cruises, P&O Cruises Australia, Princess Cruises, Seabourn. So they don't just own Carnival brand. When you're buying into this company, you're essentially buying these other huge cruise brands as well that Carnival has acquired over time and continue to build out those brands. So it's not like there's a risk in terms of you just own Carnival brand and that's it at the end of the day. You own several different brands, which is phenomenal for pricing power. Now let's go ahead and take a peek here at the income statement of Carnival, and you can see this is a company that has consistently grown total revenue. So in 2017, it's a company that did $17.5 billion in total revenue. Goes fast forward to the next year, 2018, they do $18.8 billion in total revenues in 2018. 2019, which the year ended November 30th, which by the way, that's a little weird to end your year there. Most companies end their year on December 30th, but Carnival ends theirs on November 30th. But they did $20.8 billion in total revenue in 2019. So this is a very important thing I like to look at in a company. Is a company consistently growing? Are they, continuing to show that they can grow the business? Isn't some type of company like some of my other stocks, like a Facebook stock or a Tesla stock, or one of those type of companies that, is growing super fast. This is not that type of company, and this is not the type of investment that serves that type of purpose where I'm trying to get, into a super fast growing company. This is a really compelling stock from a dividend perspective, an overall business perspective, and a valuation perspective, as we'll see throughout this video, and it's really intriguing. Now, I don't like to just look at revenues. I like to see the bottom line. What's the bottom line doing? The net income, what's left over at the end of the pie? So we see this is a business that has grown over the past few years. So if you go back to 2017, they do $2.6 billion in net income. Then in 2018, that number jumps to $3.1 billion in net income. Now it did slightly drop this past year to just under $3 billion of net income. But when you look at a 2-year perspective, it still grew very nicely, nearly $400 million if you're looking at a 2-year perspective there. As far as EPS, they did $3.61 in 2017. 2018, they do $4.45. This past year, $4.34. So we get a little bit of a mixed picture there with the net income because of the slight drop from 2018 to 2019, but still phenomenal growth if you're looking from 2017 to 2019, okay? Now, it's not just important to look at what the company has done over the past 3 years. You also want to look at what does the company expect to do in future years, because obviously when you're buying into the stock, you're buying for the future of the stock, not necessarily just the past. The past is good to look at for reference and to understand where the business has been, and you can start to guide some things on what you think the business will do in the future, but it's all about the future whenever you buy in a stock, okay? Now, current year 2020, this company is expected to grow the bottom line from about $4.40 to $4.54. And in terms of next year, 2021, EPS should jump to nearly $5 a share. $4.89. Some analysts have them doing $4.67. Some analysts have them doing $5.42. I think around a $5 EPS number for 2021 should be somewhat realistic, assuming the global economy is just decent at that particular time in 2021. So it's definitely something positive I look at. I want to see a company that's expected to grow EPS in future years, and obviously this company would fit the picture there. Now, as far as revenue growth goes for the next few years, it's a company that's supposed to have about 4%, just under 4% revenue growth growth in 2020, but that number is supposed to accelerate into 2021 with 6.4% revenue growth in 2021, which is a phenomenal thing. I love to see a company that's not only growing, but it is supposed to have accelerating growth. This is a huge thing for a public company such as Carnival Cruise Line. You want to see accelerating revenue growth. You don't want to necessarily just see a situation where revenue growth is slowing and slowing and slowing. When you can get a year where revenue growth is accelerated, that means that EPS number usually strengthens quite considerably, as long as that company is not just growing revenue for growing revenue's sake or something like that, which in Carnival's Cruise Lines is definitely not a company that would just grow revenues to grow revenues. This is a company that's focused on profitability, and if they're going to grow revenues, they want to usually grow the EPS by at least as much as they grew revenues, if not more, okay? Now, in terms of looking at the past earnings history for this company, very important metric to kind of look at to see, is the management team there guiding numbers correctly? Are they over-promising and under-delivering? Are they under-delivering and over-promising? What's going on there? And so if we look at the earnings history, out of the last 4 quarters, they have beat numbers every single quarter for the last 4 quarters. 11% surprise back in February of 2019. You go to the May quarter, they have an 8% surprise. You go to the August quarter, a 4% surprise. And in the most recent quarter, a 24% upside surprise, which shows the executive team on this company knows how to guide numbers properly and understands the game of Wall Street, which Wall Street hates it if you put a big number out there and then you miss that number badly. It's usually a poor sign. When you look at a management team, if you see a company that's consistently missing numbers, it's just usually a company that's not well run and a company that most people will not want any part of, okay? Now, we talked about some future growth for this company. So 4 Carnival Corporation brands will launch new cruise ships in 2020. This is very exciting. And the company in total will introduce 16 new ships to its fleet by 2025. So this is a company that's not just focused on, let's try to make as much profit now and then let's just, not worry about the future. It's a company that's consistently reinvesting in its brand and reinvesting in its ships and buying new ships, because what ends up happening when you got a fleet of, in terms of Carnival Cruise Lines, this is a company that has over 100 ships. So some of those ships might be from the 90s. Some of those ships might be from the early 2000s. So some of those ships might be getting a little out of style, might be just getting a little old, and those ships aren't nearly as valuable to guest experience anymore. And so in order to always push guest experience, you always got to make sure you're keeping up with the latest trends and designs and what consumers want in 2020 and what they're going to want in 2030, not what they wanted in 1998 or something like that. So it's very important for a company like Carnival to consistently be making new ships and making that guest experience phenomenal, because that's what the guests will pay for. And so I definitely love that they continue to reinvest in the brand, okay? Now, if you're thinking about competition for Carnival Cruise Line, it's actually not really the other cruise companies, okay? So I got a picture of Cabo San Lucas, Mexico here, okay? And I just thought this would be a good one to reference. Let's say you were thinking about going on a vacation. Maybe just, you and your significant other. Maybe you want to go with your family. And you're like, man, I want to go down to Cabo. I want to go down to Cabo San Lucas, Mexico. And I want to take a little vacation down there, okay? Well, if you're thinking about I could go down to Cabo San Lucas, I could fly to Cabo. And obviously that's the fastest way to get there. You just get on a plane and you go straight there. And so that's an experience that some people like. Some other people might say, you know what? I would like to take a cruise. It's a different way of seeing the world, and yes, we take our time getting there. It's not like we're getting there in 4 hours. It might take us a day or 2 to get down there, but you know what? We're gonna get to see the world in a whole different way. There's restaurants there, there's nightclubs there are pools, there's spas, there's likely a casino and all those sorts of things. So somebody might say, you know what? I wanna have that experience to go down to Cabo rather than this plane experience. And so that's really who they're competing against at the end of the day. They're competing for, someone like myself that has, a wife and 2 kids. Let's say we're thinking about doing a summer vacation. Do we take a summer vacation where we go in a car to get to our destination? Do we go in a plane to get to our destination? Or do we want to take a cruise to get to our destination? And that's where Carnival's really competing with. They're not necessarily just competing with the cruise industry. They're competing with overall vacation spend, and how do people like to travel to the destination they want to go at the end of the day. And the bigger the cruise industry gets, the better and better thing it is for a company like Carnival that owns a ton of different cruise brands out there, okay? Now, the CEO of Carnival Cruise Line, it's always very, very important when you're judging a stock and you're thinking about putting any amount of money in a stock, especially if I'm thinking about I'm going to put $100,000 plus in this stock. Super important to pay attention to CEO. And I gotta say, Aaron Donald, I definitely like this guy. He's been the CEO since around 2013 at the company. He's done a very good job of growing revenues, growing profits, and righting the ship, no pun intended, for this company. There's a ton of different interviews on YouTube of him, which I definitely use YouTube all the time. It's actually a reference for kind of like understanding CEOs and understanding if they're good, bad, if I like that CEO, if I don't like that CEO, all those sorts of things. It is extremely important to pay attention to investor presentations they do and a ton of interviews. And in terms of Aaron Donald, there's a ton of different interviews on YouTube. And I gotta say, I really like the guy. I think he's a good CEO. I think he's done a good job since he got at the company. And I feel very confident with, him continuing to run that company, hopefully for years to go in the future, okay? Now let's get into some really, really exciting things in regards to this stock, Carnival Cruise Line, ticker symbol CCL here, okay? So when we look at the dividend yield on this stock, it's an over 4% dividend yielding company, okay? Now, it's not just phenomenal that I'll make 4% plus on my money, assuming the company just continues to pay out the same dividend yield, but here's another big factor, okay? I always teach people, if I'm teaching somebody about dividend stocks, it's always very important to also pay attention to the payout ratio. And a lot of times, if you're finding a stock that pays out more than a 4% yield, a lot of those companies will have payout ratios of 70%, 80%, sometimes even 90%. In Carnival Cruise Line's case, they have a payout ratio of about 46%, so less than 50% payout ratio, which is absolutely phenomenal because that means they'll be able to raise their dividend a lot in future years, assuming they just made the same amount of money in future years that they're making this year. Now, keep in mind, the company is expected to be more and more profitable in future years. So that's a phenomenal sign for a company like Carnival Cruise Line here. So assuming, let's just say I put $100,000 into the stock, I should make $4,000 plus per year in dividend income, which is certainly a good chunk of change. And you guys know I have a goal in 2020 to make more than $10,000 in dividend income, which I've never even came close to in the past. And so if I buy $100,000 plus of this stock and I make, let's say $4,000 or $5,000, depending on what they decide to do with the dividend yield and things like that, then obviously that's going to push me really close to my dividend goal in itself. So I'm really, really excited about this stock from a dividend perspective. If we go ahead and we take a look at their past history, also very, very important to look at what has the company done with dividends in the past. Have they been raising the dividends, shrinking the dividends? If we go back to 2015, this was a company that was paying out 25 cents a share per quarter in terms of dividends. Then they bump it to 30 cents. Then they bump it to 35 cents. Then they bump it to 40 cents a share. Then they bumped it to 50 cents a share back in 2018. And I wouldn't be a bit surprised if in 2020 they end up taking this dividend to like a 55 cent a share or 60 cents a share per quarter in terms of the dividend. So the dividend cash flows I should be able to make from the stock over time should be outstanding. But not just that, I think I'll actually get some pretty good share appreciation on this stock as well. So it's kind of a dually, where I'm investing in the stock mainly to get this huge dividend income, but also I think I'm going to make a lot of money on the shares if I'm looking at a 5-10 year perspective here, okay? In terms of their latest quarter, Carnival reported an adjusted 62 cents a share, beating consensus estimates calling for 50 cents a share, so a very nice beat on EPS when it came to Carnival. Quarterly revenue came in at $4.8 billion, which came in ahead of consensus estimates of less than $4.6 billion, so that's what we call a nice double beat, when you beat nicely in terms of revenue and EPS. So if you're looking at short term of the stock or long term, they're doing a really, really good job with this business overall, okay? Now, a lot of people like to think about competitive moat, and let's not rhyme competitive moat with a boat. Oh man, I just had to do that one. But in terms of competitive moat here, you got to keep in mind, a lot of these big cruise ships, if you want to build one from scratch, you're looking at hundreds of millions of dollars in costs. And some of these cruise ships are now going over $1 billion. Royal Caribbean launched one, I think it was last year, and it was over $1 billion, like $1.35 billion to build that ship. So if you're thinking about like, oh man, could somebody come in and just compete in this space? It's a very, very hard space to compete with because it's very, very expensive. But this is a very, very expensive industry, so which means the balance sheets are going to be a little bit different, and I'm going to have to sacrifice some great balance sheet like some other industries have for the fact that this is an industry that's very, very expensive. So if we look at their balance sheet, it's actually a really good balance sheet if you're comparing them against their peers in the industry. So this is a company that, depending on the quarter, usually has between $500 million and sometimes over $1 billion in cash and cash equivalents. This I'm showing you here just goes back to the last 4 quarters. And the cash and cash equivalents can move around a lot depending on when they get shipped, when they make debt payments and things like that. But generally speaking, it's a company that has $500 million to more than $1 billion in cash sitting around, which is phenomenal for a rainy day, a recession happens. If the cruise industry is ever weaker, things like that, you always want to be in a company that is cash loaded. And if we think about my only other investment in the leisure sector, that would be a company named Wynn Resorts. That's another company that generally keeps a lot of cash around. In terms of that company, it's usually $1 to $2 billion. So I love if a company's in a debt-laden industry like this, which obviously cruise lines or you know, even if you think about Wynn Resorts, hotels, these are very expensive things to build. And if they're very expensive things to build, then I want to see that company keep a lot of cash around just in case a rainy day ever happens. And Carnival Cruise Line absolutely does that. If you think about what are their ships worth, we're talking about over $38 billion in cash producing assets this company has, which is an unbelievably huge number there, okay? Now they do have long-term debt of $9.6 billion, but keep in mind, much of that long-term debt is very low interest debt that they can roll over time. And keep in mind, once again, this is a very debt-laden industry. So if you compare them to some of their peers, I really like this balance sheet. And it's a company that has total stockholders equity of about $25 billion, more than $25 billion. And so if I think about this company, we're thinking about $33 billion market cap, $25 billion in stockholders equity. That's pretty dang close there. It's about an $8 billion difference. And in terms of most companies you can invest in, that's actually pretty dang good there, okay? Now, the thing that might excite me the most about this company, other than just the overall business model and the dividend yield, is that forward P. We're looking at a forward P in the stock of under 10. And keep in mind, we're in a market right now where a lot of companies, most companies out there, are trading at an 18 to 22 forward P, with many companies trading at even a much higher forward P than that. And we got this company here trading at a forward P under 10. And keep in mind, it's a company that is supposed to grow in the future, and I am fully confident that will be able to grow in the future. And if I'm looking out 5 years from now, 10 years from now, is Carnival Cruise Line earning more money or less money than they did in 2019? I'm going to say a considerable amount more, okay? So we talked about a lot of different things in this video. Let me just kind of recap the bullish thesis here I have on this stock, okay? Number one, it's a very large established company. Number two, it's a very profitable company, a company that's earning, you know, $3 billion of net income, and I think that number could jump to $5 to $7 billion longer term. Number three, you have a very good CEO that's been in charge of this company for years now. Number four, I'm getting a dividend yield of over 4% on this company with a payout ratio under 50%. Number six, I'm getting a growing company in terms of revenue and in terms of net income. Very, very important. Number seven, I'm getting a good balance sheet for their industry they're in. Number eight, the moat for competition is insane. Not many people or businesses just have hundreds of millions or $1 billion just sitting around so they can say, let me go compete with Carnival. Carnival has $30+ billion worth of cruise ships. So if you're going to try to compete with them, it's nearly almost impossible. So if I look at this business model, I look at this as a business model I absolutely love, a company I love, a valuation I love, a dividend yield I love, and this is why I am willing to stick, you know, 100K plus in this stock over the course of the next couple of months, guys. So I hope this stock doesn't go up a bunch here in the short term because I want to get this position fully built out. I hope it stays around where it is today, and I hope it actually goes lower over the course of the next couple months so I can fully build out this position and make it into a really big position overall. So anyways, I hope you guys really enjoyed this, kind of my thought process on why I get bullish on a company, the way I look into a business model and things like that. And I want to hear your guys' opinion on Carnival Cruise Line in that comment section, and smash the thumbs up button if you really enjoyed. That lets me know that you enjoyed an in-depth video like this. Thank you for watching and have a great day.